I just invested $20,000 in the stock market. And guess what? In the next couple weeks, I'll invest even more. You may think that's crazy with all the news about a looming recession and the market being down, but it's actually going to help me retire early, and by the end of this video, you'll see how. Welcome back to my channel where we're building wealth to live life on our own terms, one money move at a time. Today I'm sharing 3 reasons why I'm still investing despite all the news and economic uncertainty. If you want to shave years off your retirement journey, you're in the right place. I'm Rami, an investor on track to retire in my early 40s, and I'm sharing all of my tips to fast track your way to financial freedom without sacrificing all the luxuries you care about along the way. So let's get into it. Number 1 is that I'm investing for the long term. Now, I want to acknowledge that investing can be extremely daunting, especially if you're just getting started. I remember early on, I would invest a couple $100s in the stock market and I would check my brokerage account daily. Any small dip in performance and my heart would skip a beat. Now, with 10 times more in the market, I hardly look. And here's why. I'm investing for the long term, and over the long term, the market delivers 8 to 10% annually. For example, let's look at the S&P 500. The S&P 500 tracks 500 of the largest publicly traded companies in the United States across sectors like tech, healthcare, consumer goods, etc. It's considered a representation of the US economy, reflecting how major companies are performing, and it's often used as a barometer of the health of the overall market. Over the past century, it's weathered a lot of market crashes, and despite short-term declines, it recovers and grows. Because I'm investing for the future, I don't allow short-term market conditions to dictate my strategy or distract me. I see them as an opportunity to double down and grow. Which brings me to my second point. I see opportunity in chaos. Warren Buffett famously said, "Be greedy while others are fearful." Most people get rich by doing the opposite of what the crowd is doing. In every recession, someone is quietly buying the future while others panic. 2008 felt like the end to a lot of people, but guess what? If you had bought then, you would have quadrupled your investment by now. So my strategy remains intact. I'm continuing to invest for the future to take advantage of compound growth. And this season presents a unique opportunity to take advantage of discounted values. Because others are fearful, there's a lot of panic selling happening, which means I'm able to acquire stocks for lower prices. This is why it's so important to be mindful about what you consume. If you talk to the average Joe Schmo, he's telling you that you're doomed and your investments could potentially go to zero. So that leads you to sell in a panic. But if you surround yourself with financial experts who have become everyday millionaires, they'll tell you to double down and go against the grain. So drown out the noise. You'll look back on this moment and either be happy that you made a move or regret what could have been. Choose wisely. And finally, the third reason why I'm still investing despite the fact that we could be entering a recession is that rebounds happen very quickly. In 2020, the market took a huge hit because of the pandemic. I remember at that time, I had some money in the market, and while I didn't sell it, I chose not to double down because I was fearful. I had friends that were pumping money into various stocks and I thought they were crazy. I told myself this was an unprecedented season and it would be risky to add even more money when there was so much uncertainty. I didn't know then what I know now, that markets recover and sometimes it doesn't even take that long. Even though the pandemic was unprecedented and it felt like the end, the market recovered in just a few months. It's actually one of the fastest recoveries from a market crash in 100 years, but no one could have forecasted that. You can't time the market. And if you're waiting for the coast to be clear, you'll likely miss the upside. If this feels scary to you, know that you're not alone, but don't stay there. Arm yourself with information. If you feel overwhelmed, start with a robo-investor. A robo-investor looks at your investing persona and actually does the heavy lifting in terms of investing in stocks for you. Everyday millionaires are made from taking calculated risks, and you don't have to be any different. Surround yourself with the right people and work on your mindset to improve your financial future. What are you doing to continue to build wealth despite a looming recession? Let me know down in the comments. If you want to shave years off your retirement journey, subscribe and hit that notification bell so you don't miss my weekly tips. Stay financially fabulous.